Welcome to another riveting edition of Risk and Return. I'm Charlie Gasparino from an undisclosed location, even though you see the S3 stuff in the background. I'm actually out of town today, but so in order to get a professional background, of course, we use the background of the best data provider on the street, the number one outside vendor for Bloomberg, the brainchild of the man, the myth, the legend, Bob Sloan, who has been out of town for the last couple of weeks. We missed him, traversing the world and in search of data everywhere. Were you in Greenland, by the way, Bob? Did you?
No data in Greenland. There's a lot of minerals, but no data. No, there's no data.
I'm glad you're not traveling overseas right at this point. And we're gonna get into the attempts in the Middle East later. I just want to say a friend of mine is literally stuck right now in Doha. His name is John Tatum. He runs a very big sports marketing firm. It's called Genesco Sports. It's big in Dallas and does a ton of work with the Cowboys. He was visiting in Doha, one of the official sponsors of the FIFA games that are coming up. It's Kuwaiti Airways. So he flew in Thursday, no inkling of war last Thursday. Had meetings Friday, great dinner set Friday night at Hakkasan in Doha. And then he wakes up to what he thought was an Amber Alert on his phone. And it was half in Arabic and half in English, shelter in place because the bombs are starting to fly. He turns on the TV, he sees BBC, Trump talking about war. And then literally he's 10 minutes from the U.S. Air Base in Qatar. Doha is in Qatar, obviously. And then they start seeing the bombs flying over there. And it was like seeing bombs, in your backyard. It was just horrifying. Long and the short of it is he's stuck there. And the State Department, at least as of today, has been extremely unhelpful. There's a 1-800 number you call. I mean, this is a prominent businessman. We should point out that John Tatum is a huge bundler of GOP cash. So it's not like, he doesn't have means and access. But, you he was relying on the State Department. You call a number that they provided and you get a voicemail or a voice system. And it's like, basically without saying these words, it says you're shit out of luck.
Well, it's being over there and then seeing it in person, like John. You and I met. You introduced me to John. I want to say before we actually started this podcast.
Yes. Yeah.
John is a force in nature. He's a whirlwind. He's a whirlwind of a guy, and he's so deeply plugged into sports around the world. He's a fascinating guy. So if he doesn't have the contact, kind of like nobody does.
And politics. He's a big time guy in political circles. He knows everybody. It's unbelievable. And so I've been calling around, and I've been finding that this is not an isolated instance. There are a lot of people overseas. Qatar is particularly difficult to get out of. I think part of Saudi Arabia you can get out of. It's a mess. And the problem was that no one saw this coming. There was no real sort of, watch out, don't travel. Trump, part of this was the art of surprise on this thing.
It is amazing how tight the Trump administration keeps things. Previous administrations, there was so much leakage, or maybe purposely so. You never know. I mean, this is your neck of the woods, but man, that was super tight.
Well, a lot of times news organizations won't publish stuff on battle plans and stuff. They just don't want to go there, risk American lives. So I think that's part of it. But I see John's point. John is very mad. He's like, listen, I had no idea. I was worried about the protocols of Ramadan going over there because it is Ramadan, the holy, I guess the holiday for the high holiday for Muslims, and he was worried about that, but he was not worried about a war. And then literally, seeing like bombs in your backyard they were describing it to me, he and his team. plumes of smoke. And first off, it was a clear day on the Saturday that we started, but that would be Sunday us, I think. But when they started bombing, I mean, they would see it up in the air, the intercepts, like the missiles coming down the U.S. Because the U.S. base is there, 10 minutes away, intercepting these missiles. And they would see the explosion. They would actually even see the shrapnel. So they were right in the middle of it. They still are. And but best wishes to John. Hopefully we can spread the word a little bit and maybe get him and some people out of there, because it's literally like there's all the airspace is closed down. Do you want to talk a little bit about the war and the impact and the economic impact here?
Well, I think the first thing is, Charlie, I would venture to say that there's a lot of opinion out there, and I think it's one of those things where people that say they know don't know.
Yeah.
I don't think anybody knows. You're not close enough to it. You're not inside the room. And if the rest is just filling airtime, it's a lot of conjecture. So we're going to stay away from, what we think will happen or why things will happen. The things we're looking for are the reaction in markets. And clearly the bond market, you look at some of the short interest in TLT, which is the interest rate sensitive, the longer end ETF, that has been rising. If you look at shipping, which we're going to go into a little bit later in the show, that's been rising. So everything that is either C lane, interest rate, macro sensitive, and we've seen our data explode with, and maybe that's a bad choice of words, I'll say, we've seen a dramatic rise in activity, hedging activity, and then outright short bets, thinking about and trying to predict what will happen over the next days and weeks as things either increase in intensity or settle out. It's just one of those things. I think it's impossible to predict.
Yeah, I agree. I think this plays to a lot of what you bring to the table, because I think more than ever, this is a trading market. If you're an investor, probably the best thing is to do nothing, because if you look at past history, and I've been talking to people like the Larry Fink types, obviously this could go haywire either way in the short term, but in the long term, usually this stuff works out. Peace will be reestablished. If you go by logic, the Iranian government will be either dislodged or neutered to a large extent. The Straits of Hormuz will be opened to a large extent because their military has been decimated, including their navy, because they've been so the leadership has been so weakened, and their military downgraded so much. Their ability and their economy hurt by this, obviously. Their ability to fund terrorists have been downgraded. So the Houthis and Hezbollah, Hamas, whatever's left of them, they're just not what they once were. So
Or they
long
anything.
term.
I think one of the fascinating points here is that for 40 or 50 years, we've been told that, and look, it still may be proven out. I'm not going to discount it to zero, but we've been told that this type of taking on Iran was impossible. It was existential, terrible thing that could not be handled or contained.
And it would lead to like massive global disruption in terms
global
of
destruction and
terrorism everywhere.
And all that. And what we have found is that since the Israelis went in the first time, then the second time with the US, now a third time, we find that, in fact, if in fact the Chinese and the Russians did sell them their most sophisticated hardware, if in fact Venezuela had the most sophisticated hardware, that it doesn't really matter. So the real question coming out of this is, what do you think U.S. opponents are thinking right now?
Well, it's funny because if you read the press right now, Bob, including the New York Times in particular, you would think we're losing this war, that we're in the middle of a thing that we can't get out. This is Vietnam or Iraq all over again. But if you look at the facts on the ground, this is going to be short. It's going to be a month long at the most at this point, and it looks like we're going to get out of this thing in much better shape. Hezbollah, by the way, was weakened even before this, so could strike them out, right? The Houthis, they haven't been weakened yet, but maybe they will be. And if they don't have a funding source, that's a problem for them. And Iran, even if the Ayatollah's brother-in-law comes in there, ultimately, if they don't kill the son or whoever's coming in there, he's not going to have much to work with. So this, I think people are undercounting just how much of a positive this could be. Now, obviously, wars are tricky and risky, and for all I know, for all we know, he's going to, a U.S. aircraft carrier is going to get taken out. That would be a real problem by some wayward ballistic missile. But barring something like that, this thing, we're going to be we're still in the middle of it. It's going to be nasty for a couple of weeks over there, Iran in particular, and then they're going to lose, and it's going to be obvious. And here's the thing, Bob. Here's how you know that they're on the losing end. And again, I'm not a military expert, but I'm just going by common sense. They indiscriminately bombed every country, even friends. They just hit buttons. It was like they were hitting buttons. Right. And, by doing that, they wasted a lot of arms, a lot of their ballistic missiles.
Well, one of the things that's, I think, really fascinating about this is oil, the price of oil.
Stable.
Maduro is now a guest of the hotel services of the U.S. government, right? And then Iran now also. If you're China and Russia, and that Cuba's next, what are you thinking? I think that's the big takeaway. And your point about the press. The press loves the word quagmire. The great David Halberstam used that in the book that made him famous about the Vietnam War, that it was a quagmire. And they seize on that, and they try to say that everything we do is Vietnam. And by the way, I think Iraq was a terrible mistake. That was unnecessary. And so all those words that remind us of failure, they love to use. They love to remind us of failure because it means basically that the current administration cannot be credited with anything. And I love John Fetterman because I think he's right. It's like what we're doing is an amazing thing. I hope it's successful. Don't know if it's going to be. But in the interim, why are we rushing to say this is a failure? This is a quagmire. This is terrible.
And let's face it, we're not exactly taking out nice people. These are people that have been at war with us for years. And that's why I think this is net positive. Okay, we get a spike in inflation now, very temporary. Spike in interest rates now, temporary. You can go down the line. Gas prices spike a little bit, temporary. Maybe businesses retract a little bit amid all this uncertainty. But that being said, in a month from now, if this thing turns out to be, the Iran neutered, nuclear threat eliminated nearly, some government in there, a shell of its former self. Are you telling me that all those things are not going to? And by the way, if something really good happens there, you're gonna get Saudi Arabia and the Gulf states joining the Abraham Accords. And if you got peace in that region, that's a positive for the markets and for the economy.
But people forget, right? What happened is that Saudi Arabia said they were going to invade Yemen. Iran said, no, you're not. And now, what happens if the sponsor state fails? The other, satellites fail too. And what's at risk here, and I think the parallel is actually, in the I want to say in the mid 1930s, people did not believe that you could actually sink an aircraft carrier or a battleship or destroyer through air power. There was a very famous general in the U.S. called Billy Mitchell, who looked at the battle.
Famous.
Very famous. Later had there was a very big trial involved. Mitchell and Douglas MacArthur was involved, but he was a proponent of air power to sink and change sea power. And what you're seeing today is also something I think that echoes that, which is the use of air power strategically and surgically to cause regime change. And that's the real essence of what is at stake.
Because and if it works,
if
you think about it, if it works, this is a pretty tidy way to get rid of a belligerent regime in a economically important area of the world without boots on the ground. And it's such a positive. If you're thinking long term, this is, you might want to rethink your bets against the economy amid this, because this could unleash growth like you wouldn't believe.
Well, it could, because number one, at a higher price of oil, we are self-sufficient. It just means you'll have more exploration, you have more gas drilling, but whatever gaps there are in terms of energy will be short-term, because there'll be economic incentives for the locals here in the United States to do the exploration, drilling, et cetera, necessary to increase supply. So natural market forces will work itself out. There'll be some short-term pain, though. I think the interesting point is that the words quagmire and the words unnecessary don't really understand the technology that's being used and the power of the technology to use air power to displace a regime. That's to me, that's the juxtaposition of old versus new. And that's really what's going on in Iran. And then you throw that in with the geopolitical subtext of China being so important to Iran and so dependent upon Iran to do the things it wants to do. Remember, Trump has a meeting with Xi in April. It's around the corner. What do you think they'll be talking about?
Well,
what do you think they'll be talking about?
China likes using Iran. They're going to have to use another nation, another state to do what they want to do. Same with Russia. But
same thing.
I think we've here's the thing, Bob. I hate to predict stuff. I'm just looking at this from a market perspective. It's potentially extremely, extremely positive. And I hate to reduce war. People, by the way, we have lost 6 U.S. servicemen. I'm not minimizing death and war and what's going on here, but I'm just saying that there's the story about the economy and what it means for the economy. If this is a successful mission in the sort of broad sense, remember, Trump defines success as we neuter them, get rid of the new people come in, but they're feckless, they're not belligerents to us and to the region. I mean, the bar for success is not as high as people think. We don't necessarily need regime change. That would be great, and maybe there will be regime change. I mean, listen, we're only a couple of days into this. If for another 2 weeks, if they have the same rate of progress they've had over the last 3 days, well, I mean, I don't know who's going to be left to run things over there except for the exiled government of the Shah, the former Shah. So. This is to be played out. There's a tragic human side. There's the side I talked about with John Tatum, a lot of Americans stuck over there and fearing for their lives. But this could, if you're looking at the economy long term, writ large, I think it could be really good. Oil prices come down, inflation comes down, the whole thing. And you always get a peace dividend, Bob. There's always been a peace dividend after most wars. Even the Iraq war, there was some sort of after we won, there was some sort of a peace dividend, even though we had to manage it, and it was a horrible thing to do because it was managed nation building is insane, and Trump has vowed not to do that here. But we did. The economy did grow after both Gulf conflicts were essentially the sort of takeover phase was over. George W. Bush, HW, and even George W. I mean, he got a bounce out of the economy. Not saying that's why we do these wars. So I'm not trying to conflate everything, but if this is somewhat successful, there's going to be a positive dividend here.
If you want to go back to 2003 and you want to go back to the Gulf War, not Gulf War I, but Gulf War II,
right?
there's been a lot of let's move on to, let's say, private credit and what's happening in private credit. One of the things that's really fascinating in our data is if you look at what's probably the most important stock out there, it's CoreWeave.
Interesting. Yes, I've been reading your research on it.
Thank you. And we think that this stock has $30 billion worth of GPU financing. And who turns out to be the largest lender of CoreWeave? It turns out to be Blue Owl, which is obviously a very big, large private credit firm and very active in the space. So one of the things we've been looking at is both today. One of the lead stories, actually, just in the last hour or so, one of the lead stories on the Bloomberg terminal is cites that the short interest in Blue Owl is at an all-time high. Uses our data to actually demonstrate that point. But the second thing is, if we look at CoreWeave, and we can look at a little bit about that story, it might be the most important stock because it has such crossover effects. So you have the center of private credit jitters is Blue Owl. Blue Owl is the largest lender to CoreWeave. CoreWeave is at the center of AI, right? And it turns out that our data is actually explaining both. So if we look at Blue Owl, for example, the short interest now is at 80 million shares. It's very, very, very high, right? The share price has gone from 20. It's gone from $22 or so. It's down to 10. It's off 50-60%. Short interest is way, 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 way up. It's almost up 100% over the last we'll call it 7 or 8 months. So short interest is doubled. And then if you look at CoreWeave, that short interest was high. We've talked about it on this show quite a bit. And you can see, thank you guys. And you can see that the black line is the amount of short interest, and on the left side, you can see the number of shares shorted. So you were at almost 70 million shares. It dropped down. We were about 60 million shares, dropped down in just around October, right? Because we were talking about at that point in time, there was a crash and people said, no, there's not. People covered. And now all of a sudden you're seeing it rise up again as the price drops. So, CoreWeave, if this fails, if this stock doesn't do well, then it sets off a chain reaction. If it succeeds, then all the jitters around private credit, I don't want to say they disappear because it's such a vast industry and it's got so much money at risk, but it certainly calms things down. So if there's ever a stock that was a fulcrum of market action and encapsulates all the things, the fissures that people are worried about, it's this one. People are worried about private credit. They see obviously what's happened with software stocks, but this is AI. And if this doesn't do well, that means all the other things that have been financed through private credit with this kind of GPU financing are also subject to risk. So we're going to keep it very close.
What do you think is the catalyst behind this? I mean, we all know the banking, because I heard Lloyd Blankfein, the former Goldman Sachs CEO, says this smells a lot like 2008. We all know what happened in 2008. It was every bank got involved in the securitized mortgage underwriting business. At some point, they couldn't sell their debt. They kept it on their books. They carried the trade. They made a lot of money carrying the trade. Then all of a sudden they had to mark that stuff down to market at some point when prices started to implode. And that was the slow drip that led to the financial crisis, where everybody was insolvent and we needed massive bailouts and QE and all that sort of stuff. It was kind of like you kind of saw it coming, though. I mean, you kind of knew what was on the balance sheet of the Bear Stearns hedge funds, which went on the first, then Bear Stearns and then Lehman and then the rest. You kind of knew it was there. there was a huge short thesis on this that was bouncing around. People was openly talking about it. Stan Druckenmiller, famously, took this took that side, and many others. All the guys in The Big Short. I mean, Goldman went shorted itself in a sense, because Goldman was long a lot of those credit default swaps. It had credit default swaps on a ton of its mortgage-backed securities, so it was long that debt. But if AIG wasn't bailed out, the credit default swaps wouldn't have been money good. So it was kind of betting against itself in many ways. What do you think is at the center of this thing? By the way, last year I was at a market panel about private credit. I think you prepped me for this, and it was at the Milken conference, and I was trying to bring up the notion of, do we have, are there canaries in the coal mine? Because people were starting to talk about it even then. And most people was like, this is just, the normal ructions. What do you think is going on here?
You got $600 billion of CapEx. Not all of it's going to be financed off of the balance sheet of the company that's doing it, right? So there's just a need for capital to build these data centers and build out the research. And, that you have certain engineers that are getting pay packages that are, that make the highest paid athletes pay package, Juan Soto's pay package looks small, right? So it's an extraordinary time. And there's just a massive bet that this is such a technological revolution that it changes everything.
And if it doesn't, private credit is fucked, more or less.
So I think maybe, it'd be great to actually call him and ask him, Charlie, because I think you'd have a scoop. He says, well, there's shades of '08 here. Does he mean that, well, everything's AAA rated, so therefore they're safe, right? And that was really at the crux of the mortgage crisis, right? That everything was AAA. And what in fact was behind a lot of these AAA rated bonds was things that were terrible. Had no business being called AAA. And that's really what caused the amongst many things, but that's certainly one of the main things.
And people ignored the stories that people like me did over the years about the rating agencies, how they were, they were their client was their target was their client. I mean, if you're rating the entity that's paying you, there's an inherent conflict of interest, and people ignore that. And
so maybe, and without putting words in the former CEO of Goldman Sachs' mouth, I would never do that. But maybe he's saying the assumption is that AI works for everything. Therefore, all the financing is problem-free. And maybe he's trying to say
there's haircuts coming.
There's a haircut company. Not every company can be a winner. There's the narrative that everything will be eaten by AI is not true. And so what we've seen over the last month or so as software stocks have gone to 50 cents on the dollar, you say, okay, if a lot of those software stocks have borrowed money through private credit, not all of them make it, right? So therefore you have a problem. And, either you're long software stocks that have borrowed money, that are backed by collateral that all of a sudden, whether that's the 5-year contracts or whatever it is, that are now haircutted, right? They're discounted. Or it's actual real physical assets like the chips themselves if they're an AI company. So either way, the contracts or the chips basically deserve a haircut. And he's saying the amount of financing for both those things is so large that it's a problem. That's what would make sense to me. I think that's what he's trying to say.
Yeah, I think you're right.
I think so.
Although, every time you mention 2008, you're adding another dimension.
Well, you're adding a element of fear, concentration risk, and that 2008. What I was trying to say before was that everyone made an assumption where there was a baseline that everyone accepted. the baseline that everyone accepted was that certain bonds are AAA and American home prices do not fall. It's never happened. And the baseline here is AI will take over the world. It will succeed. And it goes linear straight line all the way up to the moon.
Now, if you notice, over the long term, those home prices recover generally, right?
Exploded after rates went to zero. So that's 100% correct. But the question is, is a GPU chip a home? You can't live in a chip, right? It certainly obsolesces over time. The second thing is, I believe, the Citrini research piece that came out that basically says all white collar jobs are suspect, everything gets replaced. I'm just not there with that. I think that's bear porn. I think that's when you try to spend $600 billion on making sure that this type of technology is adopted, you can hire a lot of opinion. And it wouldn't surprise me if any one of the researchers here, they're all lots of conflicts.
Oh, yeah.
I think there's a misunderstanding of some of these companies and how embedded they are. And I always laugh because one of the things that we do here is, we sell software, we sell data. Do we use our own software, right? Well, we could certainly use the software we created to create our own sales force. Do we do it? No. Neither do the people producing AI. So, Anthropic, et cetera, have open recs for Salesforce engineers, for Workday engineers, because they use those systems. So until they actually build something that can displace their need, it strikes me as a little hollow. And I know that that's maybe not the example to use because I think it's a multi-level problem. So, we're big consumers on X. You and I we love X because I think one of the great stories actually is Elon Musk buying X. If they charged a buck or two to everybody, it would be incredibly profitable.
I'd pay, wouldn't you?
I would do it in 2 seconds. So, I guess what I was trying to say was I read on X these posts that are obviously bought and paid for. Oh, you're going to replace the Bloomberg terminal. You can replace it tomorrow. And it's kind of like, well, how many trades go through Anthropic? What kind of tick data does Anthropic have? Zero. Yeah. What kind of really useful information does it have? Does it have licensing agreements? I've asked Grok this, and it's on my account if you want to check it out. So Grok, do they actually have this? No. Do they have that? No. But why is Bloomberg so powerful? Because you know what? When I IB somebody that's well known in the markets, you know what? They pick up.
Yeah, and it's proven, and the system works,
and it works.
You're trustworthy.
The reliabilities and the redundancies, and there's everything that's there. So there's all these different assumptions. It says, well, this can displace it, so it's going to happen. And I think that's what Blank Find is getting to, right? It's just that kind of linear thinking has encapsulated everyone in this gold rush to commit risk capital in a way that's concentrated. Everyone's in the same deal with the same baseline assumptions that may turn out to be not right. And that's why he may be echoed away.
You know what's interesting, a little bit off topic, if you look at trading of Oracle shares, Oracle, by the way, I looked at like about a year ago, Oracle was trading lower than it is today, by the way. So it had this wicked pop on AI promise. And then it started to tank on AI promise, like AI would take over its software business. That's the one thing that kind of scares me, that this sort of like this sort of wipeout of the software company shares is way overdone, because that's like ridiculous logic. That's circular logic. It's like, so it was AI was going to help it, now it's killing it. I mean, what is that? Do you see what I'm saying? It's just
bizarre. I do, and what people are saying is that database management by Claude or OpenAI, et cetera, they're going to displace Oracle. And the market is a discount, like the market does what it does, right? It's a voting machine. It's a faith-based system. And what they're saying is, we were worshiping at this God. Now we're going to worship at this God. And that's what we're going to go do. I don't know. I think it's a much more complicated thing. So one of the things that I think a firm like Salesforce could do, if someone from Salesforce is listening, we have a solution for you. It would cost a lot of money. It would cost a lot of money, but privacy and hiding the prompt and not exposing it to open source is a big deal. And the ultimate winner in all this thing are going to be those LLMs that actually do that. That's our opinion.
I agree.
And so what may actually end up happening is that you may get a massive demand for chips, but for precisely the wrong reason, which is that people want to locally install their LLM rather than using something else. So that's a possibility. And because they'll be like, okay, it's safe. I know it's bilateral. And all of a sudden you've got this fragmentation of something that wants to be a consolidator. It makes sense to me that would happen. The question is, at what scale? Does that happen at the retail user? Probably not. Does it happen at the corporate level? It'd be one of the first things you'd look at. So I think that's what Blankfein's getting to, is there's a baseline assumption of success. People are blinded by it and have thrown a ton of capital at it, at things that are ultimately subject to the variation of how technology expands and develops over time. And that variance is big enough to where it causes a fracture, right? It causes a failure. And that's why we started talking about, after we're talking about Iran, we wanted to talk about CoreWeave and Blue Owl. And it just so happens they're at a nexus in the same stock.
By the way, Bob, this time last year, Oracle was trading at $157. About a month later, in April, it sunk to like 145. April, May it was trading in the 140s, and now it's at 152. So this is not a stock that's, I mean, it just popped beyond belief in the in this September period. You can see it right on the chart, and now it's back to where it was. People are like, so this is, the market's not saying that this stock is going out of business, as I keep hearing from some people, that Oracle's going out of business. Well,
it leads us to, you're reporting on the Paramount deal. If you would listen to us, and specifically to you, one, you've been so in the middle of it and so absolutely, I'll just say, effing. We don't like to curse in this show.
Thank you. Well, you don't like to curse. I do it all the time.
Yeah. We like to, we like to keep it clean.
I try to keep my mouth shut.
We try to keep it clean. You've been right in the middle of it. So now we're talking about Oracle. They're victorious through Paramount. What do you think will happen? What does the future hold for CNN? And it's funny. I've just had a meeting this week with some folks that are pretty influential in the broadcast industry. They're very well known. It's funny. Some are like, I don't care. Some passionately care. It doesn't seem to strike everybody. What's fascinating to me is, like, well, okay, CBS might and CNN might, consolidate. People are so faded and jaded with mainstream media that it's a little less passionate than I thought it would be.
Well, depends on the people. Journalists seem to think that someone who's friends with Trump, that's Larry Ellison of Oracle fame, co-founder, running these two sort of blue chip news organizations, now CNN and CBS, that's somehow that's going to destroy journalism. We should point out that journalism has been destroyed. If it's being destroyed a lot earlier, CBS is a shell of itself. CNN has got a lot of problems. Mark Thompson, the current CEO, president of it, was brought in to fix those problems. It veered too far left. Management knew it. Even current management knew it. And they've been trying to, sort of right that ship for a long time. Here's the thing: when you read in the Washington Post and other places like an obit on this Ayatollah Khomeini that was just wasted by Trump about like how this guy was like this sort of wonderful cleric at certain times. This guy's a brutal murderer. That'll show you how much of the media is sort of out of touch with reality. It's literally a propaganda arm for progressives. And those are the people that are worried about what might happen. Listen, Barry Weiss runs CBS right now, like the independent, some would say conservative. I don't think she's conservative. She's heterodox in a lot of ways. She's running
centrist. She's a center. She is a centrist.
She's a radical centrist, and she's not woke.
But that's the point, right?
She's not woke. I mean, we know that. She hates the progressive dogma that came out of the media. She worked at the Times. She also worked at the Journal on the editorial page and went to the Times. She hated that. That's what caused her to start the Free Press and make a name for herself. So she's looking to move that needle back in the center, not just in the center, but to embrace sort of outside the box thinking than what is generally in the mainstream media, which is just this very closed ecosystem of progressivism that embraces everything from DEI to transgenderism. I mean, it really is stuff that's so not what the most Americans are, wake up in the morning and care about. So she's looking to do that, and people fear she might do that to CNN. I would say that's a good thing. I would also say that if CNN, okay, let's just say the Ellisons didn't win this battle where they're merging CNN, they're going to get some efficiencies between the two, obviously. The synergies that means is going to be cuts and layoffs. They have to get cost savings. Let's just say CNN let's say Netflix won. Remember the plan if Netflix won. This was a plan if Warner Brothers stayed independent. They would have spun out CNN and the cable channels into a separate company. That separate company would have had a lot of debt because they were trying to take debt off the balance sheet of the streaming service in the studio to make it more attractive because that's the growth properties. CNN still throws off a lot of cash. I mean, I'm reading, I did a story about this. I mean, free, cash flow is, we're talking about like almost $1 billion and, profits of 600 million. So that could pay for the debt. So that's why they did it. But they would be in this separate company with a stock price that's maybe worth $1 a share. It would have been easy pickings for Dan Loeb or Nelson Peltz to come in and activist it, force them to sell and, get a private equity buyer, whatever. Cut a lot, What do you think if they sold this to private equity? What would happen? They would
be broken up in 5 seconds.
Yeah, they would just torch the place. They get rid of. It's an international organization. CNN does. They would get rid of all the foreign bureaus. They would downsize. At least these guys want to run it. Now it's going to be smaller, but they want to run it. So I think the journalists are lucky that they're part of this bigger thing. And I think, only time will tell. In terms of the overall sort of what they want to do, listen, they want to do stuff with AI. They need to do stuff with technology. Oracle has the cloud. That's going to play a key role in whatever comes out of here. The use of that cloud and their technological prowess is going to be key. And they're kind of good at it. And I think that's where Larry Ellison will come in a major way and help take what they have is a conglomerate, but help right size it for the future with technology.
But don't you think there's something wrong where we just went into Venezuela, right?
Right.
Show me a mainstream media news story on Venezuela today.
Well, yeah, I just like to know, like, what's going on there, right? Are they
What's
killing
going
people in
on?
the
We just
streets?
went
I
in, we
mean,
took the top
is
guy. There's
this
all these people
is
below. We're supposed to make all this investment. And what happens is that you tell me this is your neck of the woods, but it just seems like if something rises to the point of spending money on coverage, we'll do it for 48 hours, maybe 72 hours, and that's it. They don't have enough money to actually do what the New York Times did a long time ago, which was to have this sprawling apparatus around the world where you had news centers everywhere, and you had heads of divisions everywhere reporting. They would have someone in Caracas. They would actually have a physical presence there reporting on it. And that this
I
is
mean,
a
I
major
think they still
story in
do.
the hemisphere. And it's like a news. It's not that there is a news blackout, but economically there is. Right? They don't have
You know,
the manpower to
it's funny.
support.
It's funny you say that because we were talking about the New York Times. It is among the most profitable independent newspapers around, maybe the most profitable, and makes a lot of its money off of these side things, Wordle
Wordle.
and crosswords and the cooking section, which I subscribe to because I'm an amateur wannabe chef. But you know what's interesting? They don't pay their journalists a lot. There's a few people that get paid there. So they really, this is not what you think. I mean, it's not profitable while they're paying for people to be in all these various cities and get you the best scoops. They still do that, but it's very, this is a lean down, very lean news machine. And I think, listen, I'm not overseas. I cover Wall Street, which thank God is in my backyard. It's a lot easier and cheaper for me to cover something like Wall Street. I almost only need this, which is my iPhone,
Yeah.
and access to S3 data, which I got, thank God. And maybe a Bloomberg machine or two, but I mean it's a low. Think of it this way: I can move a stock, which I have with Warner Brothers
A lot.
billions of dollars in market cap, right? I can move that for the price of this,
Yeah.
which is negligible.
Yeah.
And that's the difference between the type of reporting that we do that is scalable, actionable, and by the way, profitable because people need the information. The general public, many people don't care about what's going on in Caracas right now.
Well, but it's part of a larger whole, right? So
I agree.
if you believe that Venezuela, Cuba, Iran are linked in a strategy to isolate our what is in the national security white paper, which is China is the biggest threat of the 21st century to America, and this is our strategy, then that's got to be worth covering.
Yeah, maybe you and I should cover it.
Well,
I think you and I are going to cover this next week.
I think so because we should, and we should.
And we should get Jack Devine on. We should get Jack.
Yes,
And we should get Jack Devine on.
I think we should get Jack on next week and cover it. He's always fascinating, and
we've been going on here for about an hour. Do you have actionable calls? Do you have stocks you want to talk about?
We have a couple of actionable calls actually that we had last week. We had a bullish call on EchoStar, which was right.
Yes, that was, and I was right. It was because I was on with Mr. Unterman last week, and I said, "Is that Charlie Ergen? Is that this one?" And it was Charlie Ergen.
That's right. That was right. And last week we also had a bullish call on Intuit, which also turned out to be right. This week we have a bullish call on Guidewire software. It's a core operating system for property and casualty insurers. Short interest is up like 186%. We think it's a classic squeeze setup coming into Thursday's earnings, which is tomorrow.
Interesting.
As we're doing this. And that's our call for the week. We have one, which is Guidewire software, GWRE. That is what
they have earnings, and they have earnings on Thursday.
Yes. And then next week, what we're going to do is we're going to go back into inside the buy side. We're going to go into the Z scores of short interest. And if we could just pull up that slide, because this is actually a fascinating slide. when we looked at shipping stocks and the shipping index, and to see which stocks around the world actually have picked up a meaningful, compared to its own history, meaningful intensity in short interest. And it's where do you think the number one is? In Japan, which makes a lot of sense, right? Number two.
Now it makes sense because with China, belligerence from China.
Because it's this is a massive geopolitical conflict. So what is interesting is we just talked about how the news stations aren't covering what was in the National Security White Paper in its totality. The short interest is actually saying to you, look at what is the most compared to its own history. Where is the most intensity in short interest? It's in Japan. And so that's
fascinating.
It's a great.
Now, this makes me think this, Bob. You don't need a person in Tokyo to do this. You need access to smart people like you. We provide you that access, and we basically decipher the numbers and what they mean. And so we'll cover these geopolitical tumultuous events via the markets and the data, which might even be, which is in some ways a better barometer than some guy on the ground, because then you're dealing with their biases. What do they see? What do they feel about the conflict? We're not talking about what we feel. We're talking about here's what the markets are saying, and here's what the smart money is moving. And smart money moves often the best, and we talk to the best here, not based on emotion, but what they think and what they discern, because they have a lot of money at stake.
Well, it's the sum total of all the analysis that goes into actually making a bet in aggregate across Wall Street, across the world. I mean, we're not just picking up things in the United States, we're picking up things in Japan. So you look at this chart right here, you'll see Mitsui OSK. That has the largest move. It's the biggest mover, the biggest standard deviation move above the mean in our data set. In the shipping index is Mitsui. And then if you look at the largest year-over-year increase, which is on the left quadrant, it's Maersk, COSCO shipping, etc. But Orient Overseas International, Mitsui OSK again. So the left is total, let's say, short interest compared to what is tradable. The right is short interest compared to its own history. What's the intensity? And Mitsui OSK comes up at the top, even though it's number 4 in the largest increase year over year. And that's telling you something. And it is telling you the sum total of opinion that people are now worried about what's happening between Japan and China as a result of what's going on in the Middle East.
Maybe they're being too worried if we come out of this other thing successful.
That's very possible. But that's not what the data says. So
I know.
I think on that note, Charlie, why don't you lead us out? And then next week, we'll go back to being live.
Yeah, we're going back to being live next week. A little technical difficulties here, but we didn't want to disappoint. I wanted to, make sure Bob's back in the saddle now that he's back from Europe. We're going to go live, and we'll just end it here with another riveting edition of Risk and Return with Charlie Gasparino and the master of data, Bob Sloan.